Has anyone noticed that savings accounts, checking accounts, and money market accounts all are sort of the same thing today? It used to not be that way. And I think I found out the reason why, and I'm going to get into it. But first, let me show you a little bit of the history, and it'll help you to understand this a little better.
And bank after bank across the country is hit by panic withdrawals. New lines appear on American streets, depositors swarming to snatch out what savings they have left before it's too late. Banks by the hundreds, by the thousands are forced to close. On the eve of the presidential election of 1932, the whole financial system quakes and totters.
So after all of the bank failures came a whole bunch of new laws, and they created the FDIC insurance that insures deposits. It created the Regulation D of the Federal Reserve, which sets deposit requirements and withdrawal limits. And that's basically what we're going to be discussing today, because that's what has changed. It was all designed to make banks more stable. What a checking account, let's define what a checking account is and what a savings account is, and maybe what it compared to what it was. So I think U.S. Bank has a very good website as far as the traditional definition of a checking account. Now you'll see here, it says, what is a checking account? Key features: safely hold the funds you need for day-to-day expenses. Provide access to your money through a debit card. Okay, what does it sound like it now? It sounds like a savings account, ATM, or checks. Easily link to bills and other accounts and automate an online bill pay. Okay, what's that? Online bill pay? That's savings accounts now. May earn interest. Oh, that's savings account, definitely. So now it says, what is a savings account? A savings account is like a piggy bank. It's a secure bank account meant to hold and protect your money for future use. Earns interest to help grow your money in your account. Okay. Having money in separate savings keeps it from being tempted. So they're talking about using this like a piggy bank, like something you would teach your kids possibly to hide their money and save it so that they don't spend it all on candy and toys, right? A great way to save for unexpected expenses. Ability to link a checking account for automatic transfers. See, this is how I was using my checking account until just recently, and then I started thinking, wow, I must be the dummy, because it seems like everybody else is probably already doing this, but I guess I've been brainwashed for so long with this old way of thinking. Common account types include standard savings. Money market typically has a higher interest rate. And money market, another thing is money markets, it said before 1980 they were different than they were after that. So they're more like savings now, whereas back then they were more like checking. So there's a lot of changes that have been made. So, and when you look at, does a savings account come with a debit card? Most of these older banks, the traditional ones, will say no. So what caused this change? It didn't just happen overnight. It's not just like these companies all got together and decided to change it. The Federal Reserve waived its limits on the number of savings account withdrawal and transfers in 2020. So this was in April of 2020, during the pandemic, when everybody was getting paid money to stay home and stay away from others. Basically, people needed to take money out, and the government didn't want everybody rushing to the bank, and the government didn't want everyone rushing to the bank and contaminating each other and getting each other sick. So they thought, let's make it easier for them for people to take the money out remotely, and so they loosened the restrictions on the savings. And so there used to be a six withdrawal limit or bill pay per month, and there was a fee associated if you went above that, like a $10 or $20 fee. And the banks reserved the right where they could actually convert your account from a savings account to a checking account. If you started to use it like a checking account and you were making, 10 payments a month, 10 bill pays a month, or 10 withdrawals a month, then they could convert it, and then you would have a checking account instead. But they changed this, and after they changed this in 2020, I think that's when you started to see all these changes, because I never remembered it until recently. So I started to look at the rules that they did, and I put some links in the description of, I think Forbes has one of the best articles on it that has a lot of questions and answers. It explains the history, explains a lot of the questions. So this thing started during the Depression, basically. The limitations were, there were runs on the banks during the Depression, and everybody wanted to take their money out at once, and so the government tried to stop them from taking the money out. And by putting these restrictions, limits, they created this Regulation D of the Federal Reserve, and that allowed them to that basically blocked withdrawals and made the banks more stable, financially stable, because banks were going under, and they didn't want it to, for them to start going over like dominoes. Here you have a Synchrony 3.5% annual percentage yield, high yield savings account that offers a debit card or ATM card. So you can see right here it says, online options, manage, access your funds using your ATM card. So until recently, the only way you're going to get an ATM card is with a checking account or possibly a money market account. This is an example right here. Here you have, and this isn't the only one. I've got several banks. The one I just signed up with recently, called Salem 5 Direct, has a debit card option. So this was the one that's one of the highest. I still think it's one of the highest. It's one of the highest sort of non-promotional rates where you don't have to do anything. And it's 4.1%, and they have an optional debit card that you can get. So you can actually see here when you sign up. So you can see here's the savings account, the E1 savings. I don't have anything else checked. And you see there's an ATM card option where you can get an ATM card, and you don't have to have the checking account. You could just do this, it looks like. So that's an option. And this is not the only one. My Wealthfront account comes with an optional, if I want a debit card, they'll send me a debit card or a checkbook, and it's considered a sort of a cash. It's called a cash account, but it's mostly a savings account. So when did this all start? What this change does is it basically removes the limits on ACH payments and ACH payments and withdrawals and transfers. Previously, you could actually take out money via debit, unlimited withdrawals via ATM machine, but most banks wouldn't give you an ATM card for a savings account. So I don't know how you would do it. I guess you'd have to have it linked to your checking account in order to get the debit card or ATM card. But anyways, this one does it with bill pay. So if you wanted to use your savings account in the past for bill pay, you'll find all kinds of articles on the web that say don't use your savings account for bill pay because there's a 6-item limit. And it's like some of these articles are written, like just a couple months ago, and that's out of date information. I mean, that's like telling people they should be taking an aspirin, a baby aspirin a day to prevent heart attacks. It's out of date information. Transfers made by computer, mobile device, or phone. Checks written by a third party. So yeah, that was a limitation on that, and wire transfers. So this is the part that still I don't quite understand. So why is it that savings accounts didn't start offering debit cards until now? Because They had unlimited withdrawals from ATMs back before this. And this actually went back, until they had 2 updates. So I looked this up. So Regulation D of the Federal Reserve was started in the 1930s during the Great Depression. The next amendment wasn't until 2009, and it was just sort of a technical one. So they basically changed it from the withdrawal limit was supposed to be 3 withdrawals and like 3 this. They had broken them up into sections. And so they removed that and they just said a limit of 6. And it could be like all of them total, I think. And that's all they changed in that. And then the next one was, of course, April 2020. That's where we're at now. And that's the big one. And removing that 6-item limit, what does it do? So other than the limit, does it remove your fees? No. So they give the banks the option. If the banks want to charge fees for the 6 items, they can still keep doing that. Like, for example, most of the really, really high interest rate banks, like Salem 5 Direct, they still have the 6-item withdrawal limit in force. And if you go over that in a month, it's in their fee schedule. It's a $10 fee. So the ones that pay the highest interest rate, they want you to use it like a piggy bank. So Salem 5 Direct. So you can see here, it says individual banks and credit unions, however, may still have limits in place. So it's up to the bank whether or not they want to enforce the rule. And that's Wealthfront had a good in their frequently asked questions. It basically stated the same thing. Where basically it's up to the banks whether they want to pass the savings on or not. If they don't want to pass the savings on, they can charge you a fee, and they can keep the limit in place. But there's no requirement that they have to do it like before. And that's why you're seeing the popularity in online savings accounts, because they're basically becoming like a checking account. And another thing is, and when you start reading through some of the text, for example, your savings account will still be called a savings account even if you make 10 conventional transactions per month from it. That was one of the questions on the Federal Reserve site. Somebody asked, it said, if you do more than 6, can you still call it savings? And they said yes. So I did see something in the future. They may change the naming requirements as far as like whether they can keep calling it savings. Maybe it'll be something else, because the names are all getting muddied together. So money market, savings, and checking, I mean, they're almost the same product now. Why do they even need to call it? Why not just call it a bank account? Like, why do they even need different categories for it? It seems kind of redundant to me at this point. It's basically there's a need out there to solve a problem, and you've got 3 or 4 products all just tweaking it slightly to solve the same problem pretty much. But as far as having a savings account where you have to lock the money up for so long, I mean, I guess the closest thing you're going to get to that would be a CD. And of course that you're limiting your freedom as far as what you can take out, unless you do the no fee CD. And that's another thing that kind of muddies the water. So the no penalty CD, as far as I know, it's sort of like a money market or checking account. You could take the money out early and not pay the penalty. Here we go. Here's the section on savings deposits. See, this was back before the 2020. It said less convenient type of transactions such as withdrawals or transfers made in person at the bank, by mail, or using an ATM do not count towards the six per month limit and do not affect the account status as a savings account. So I think this was probably the reason. This right here is probably they could have given ATM cards back before 2020 and done that, but most of the banks, it wasn't that as competitive as it is now. Not as many online banks, I think, and not as many people moving their money around to get higher rates. So I think the fact that they didn't offer the debit card, what would be the point of offering the debit card? You could only take the money out of the ATM. You couldn't use it for the debit feature because that would be, you couldn't use the debit feature because that would put you over the 6-item limit pretty easily. So I guess it would be sort of a bad product to offer. So they just didn't offer it. And that's why you only saw it with checking. But now you're seeing banks offer savings accounts with ATM and money markets with ATM. So basically you may want to rethink how you do your banking and what you need, because a lot of these online savings accounts like this Synchrony, you can have a debit card, a ATM card. You can have the ATM card. I believe that's a debit card also, but you have your ATM card and you can do your bill pay. What do these changes mean for you? And really the only question is, do you need checks? And, in this day and age, I think the answer for a lot of people is no, they don't need checks. So do you really need to do you need an account that has a checkbook? And you can find some that have checkbooks like the Fidelity Cash Management account, but it'll cost you more. You're going to get way less interest, a lower interest rate typically. And so for me, I've always thought that I needed a checking account, but in reality, I don't really need it anymore. I mean, if I need to send somebody money now, you can send somebody money via, PayPal, Zelle, or any of these services. You can do your bill pay online. Like the days when you actually need to write a check, it just seems like it's very few things. But maybe if you buy something, they need a canceled check, or you do some type of mortgage or something like that. They used to require, like a canceled check, and that's about it. But I can't think of many other times that every time I've had to sign the back of a check, it feels like I'm writing for the first time. That's how often I sign checks. That's how often I write. And so, if you feel like you're back in first grade again, trying to learn cursive, every time you sign your check, I mean, that probably tells you that you're not using it very often. So, I mean, I think you can get by without, and even the debit card I can get by probably without most of the time. But it would be nice to have the debit card every once in a while in case I've got to go and buy something from somebody and pay cash, and you don't want to be sending money to strangers that you buy some couch or piece of furniture online. Sometimes cash is easier. So anyways, that's my video for today. Have a good one.